Microphone check and screen share check, please. All right. Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for September 29th, 2022. This is the before and after of professional trading and coaching with a focused system. Above the line is a experienced trader, all over the map. The bottom line is 4 months of trading after taking the Kata challenge and normalized at $400 a trade. Which equity curve do you want? How much work are you willing to do to tilt the scales in your direction? All right, so this was, we're going to start from the bottoms up today on this one. So this was yesterday's move. We had had a bunch of selling here that put us in a critical state, and then Wednesday there was this strong move that crushed it to the upside, and the market's back. It's put in a bottom right here. And we noticed that the price, which closed at that black line, had cleared the previous hump of the RL10 and this hump of the RL10 and the top of the dragon. And it was free and clear, and really the next target to the upside would have been the peak of the dragon over here. And then if it breaks out of the 5-day high, then it moves through this region pretty quick to get up to the next resistance level, and if it gets through the beginning of resistance here, then it could run up to this solid resistance up in this area. And then if all things really went well, it could get up to the 10-day high. So that was the argument for the pathway to the upside, fueled by the enthusiasm of one big, strong day in the market where everything was up, nothing was down. What could possibly go wrong? Well, bear normal, and with volatility not even enraged yet. So what we looked at was we respected the upside, and we remembered that the break of the PSAR here would be an indication of a potential downside, and then if it broke the bottom of the dragon here or the RL10 there, then it would really be painful if it got below 360. So essentially, the wiggle room that you have is like the bottom of the dragon, like right about there, if that were to go up. And then the gains would be up to that first purple line, which is about a 2-to-1. But certainly, if things go below the dragon, and certainly below the PSAR, it would be really painful. So we would kind of look at the escalating pain and suffering, something like that. Whereas that first little region of pain, and then the second little region of pain. So then what happens today is basically a gap down, and then an immediate sell-off all the way down to test the 5-day low, the 10-day low, and finishing up near the bottom. So that's quite a negative move all the way back down to here. Now there was in the last half hour a little bit of recovery, but not that much. So that's normal behavior for a bear normal market. And so the point I would make is that if you're prepared for that kind of move, then this gap down and then about 90 minutes of sell-off, that's the move of the day, followed by another downward move of the day. There's two very large-scale moves, and if you're nimble, you can actually get the upside move as well off that swing low. So that's what we want. So you could actually get three moves during that day. One down, one up, one down. All right, so let's put this into the larger context now. So we still have the market in a compound critical state. Hovering right at the 5-day low, 10-day low, 30-day low, 150-day low, right on the edge. And so if that breaks below 360, look out below. The upside trade still remains there. I mean, it would not be abnormal to see it just go back up and test the 5-day high. I mean, it was just there yesterday. So that's the beauty of short-term trading in bear markets, is you get those kinds of moves in both directions reliably. The 30-day shows this in sort of a blended context. Again, this was yesterday's open and strong close all the way up here. That felt really good. But then today rejects that altogether. Whoops. Today rejects that altogether, and you get that sell-off all the way back down to Wednesday's low, or Tuesday's low, excuse me. So lack of follow-through, ambiguity and chaos, increasing panic and fear, periodic manic joy. That's what bear markets are like. Routine. Standard work for normal conditions. All right, let's take a look at the sector performance for today. The S&P minus 2%. What was better? The Dow was only off 1.5. Treasuries were off 0.5, still above 100. Emerging markets and the Russell 2.25, and then the Q's off 2.9%. So weakness all across the board. It's the two conservative plays, Treasuries and the Dow, that were better than the S&P today. And yesterday's darlings, the tech, turned their back, and everything was painful in tech. All right, let's look at the sniper trade of the day. This is Devon Energy. So what I want you to notice is large gap down. So large gap. And then this establishes the opening range 3. So it opened here, ran up a little bit, sold off, and finished here. So that establishes the opening range 3 of the day is that blue box. The second bar stays inside that. It doesn't break out quite yet. The third 3-minute bar, so about 7 minutes in, it breaks down. So we're short. And here is the standard risk box in Devon Energy. Check or hold. So we're short with that frame. Instantly get a 1-hour loss. It reverses immediately. And then cruises up, so we take the minus 1-hour loss. Check or hold. And then we get a 1, 2, 3 entry with a PSAR flip. So we're long with a standard risk box this way. And that would be our stop on this one. checker hold, standard PSAR flip. There's the swing low. Okay. That one instantly fails, so take about a minus 0.8 on that one. -1. So we're down about 2 right now. When the smoke clears, we're down 2. And now what we have is the RL10 rolling over. The PSAR showing down. So standard entry, stop and reverse this way. Standard wrist box. It was essentially the same wrist box as the long position, but now because we're on the other end, it's going short. Checker hold. So that one is a 1, 2, 3 exit. So we get that. So here is our entry down, and sells off harshly. And then this makes the swing low. Then this gives you a higher low. That makes this bar 1, bar 2. Now, bar 3 takes out the high of bar 2. So that gets us long, and then it closes back here. So our standard wrist box is down here like this. Checker hold. So this is an SSC. Oh, no, I'm sorry. That was the exit on the 1, 2, 3. And then that gives us the SSC shortly thereafter. I'm sorry. I screwed that up, didn't I? I remembered that I got back into this one as soon as it hit the PSAR. So we get that standard. So the first two we were -2. This one gives us about a +1. So now we're down just 1 now. Check. Okay. That feels pretty good. By this time, you should have, your stop was here. Come on, dummy. Your stop was here. On this one big bar that's moving up, by that time you should just say, you know what, I'm going to lock in at least right there, so that I can enjoy the no lose plus dinner for 2. Now you might have, on the next run up to here, you might have then raised the stop underneath that bar, or taken half of it. So you could decide on your paper, where would you put your stop? If you're holding this, you're down 1 before this trade, but now you're about +1 because we're about 2R. This is about 2R in hand. So you could take that right now if you want at 4, and then you're positive for the day. If you cash it at 4, you're up about +0.5. 3 would make you slightly in the green. 2 would be a flat for the day. 1, you'd lock in the no lose, but you'd be a little bit short. Okay. I kind of like 3 myself. Depending on where you put your exit, you might have gotten out at 3 and then re-entered on the resumption, new high of the day. If you were at 2, then you put a second position in. As I recall this one, as I look at it now, I like 3, but where I was this morning was at 2. So this one ended up being a second entry. And you get a fractional win on the second position, or a fractional win on the re-entry, whichever way you do it. But now, by this time, you're positive for the day. And Devon Energy and the energy sector are certainly in play. It holds at the PSAR. It makes a PSAR flip to the upside. I'm long again. Standard risk box, check or hold. And then I would either have my stop right at the base of the dragon or at the bottom of the RL10 in order to minimize the risk. This is one of those reasons to trust that PSAR. Never violate it. Now, here's your RL10. There's like an RL10 wiggle. That's a legitimate second entry right here. On like a breakout of the emerging dragon. That's also about a 1, 2, 3 second position as well. So you could legitimately take that one. And with this 1 unit of risk, you're about +2 in hand on this trade. So you're comfortably in the money now. I did not take a second position. However, I did take the standard exit at the PSAR. I considered strongly the PSAR flip, but I was so impressed with the strength of the move that I was not eager to get short. I'm really just trying to stalk the long side. But now I get an R10 wiggle. Notice that right here, this was the opportunity for this thing to go back up and for me to get long right here, but it didn't. It started to roll over and fail, and that RL10 just continues south, so I go ahead and get short here. Standard risk box. Check or hold. Balancing on a knife's edge. Standard exit for another 1R. Caught a 2 entry, standard risk for about another 1.5R. So that's about 4 to 5R on Devon Energy, while the rest of the market's getting smashed today. All right, so that's the sniper trade of the day. Devon Energy, which has been our prime focus this whole week. I was doing a lot of math today and didn't have time for... Yeah, the span of control was diminished because of math. Let's go to dashboard 1. So we're still in bearish normal. The 2 days... Look back, the strength got weak. The rest of the market is wildly oversold. Risk Z says, hey, we've been abnormally risky for a while, and it's starting to get worse. Getting ready to roll down. Merck, Johnson & Johnson, United Health, the pharmaceuticals, plus Home Depot and Walmart continue to be the show. Alcoa, Boeing, Tesla is where the weakness is. Little to no change there. In the tactical stocks, a handful of dojis, but most importantly, the auto framer is still dominating. And a lot more breakdowns again today over the long periods of time. There's Intel just getting slaughtered again. Procter and Walgreens. So to me, Procter and Gamble and Walgreens are the two pharmaceutical and drugstore healthcare companies that are not participating in the defensive strength like United Health, and so their weakness is really a company weakness. So that differentiation feels important. Tesla, big loser today, along with Boeing and Apple. Man, those are like the three bellwethers, are they not, for Team America? Apple for consumer electronics, Boeing for Defense Department and capital equipment, and Tesla, the most important company in the world. Painful. In the ETFs, it's about the same story. Just a few dojis, a ton of auto framers, big breakdowns in emerging markets. U.S. real estate, even that's not a defensive safe haven. And then tech, staples, and utilities. When utilities are a big loser, yikes. Stock market tanking and utilities losing money. Boy, that's 3 of the 4 signs of the apocalypse there. Clean energy and the NASDAQ both suffering as well. So that should tell you. These are the simplest of times for trading plans, if we're being honest. And for me, the easiest targets are the ones that are, stacked up right here in order of inverse max pain range compression, and emerging markets weak, real estate weak, materials, McDonald's. Looking for my U.S. Steel. There he is. And Alcoa and Cliff, all aboard the southbound train. In the squeezes, Caterpillar, U.S. Steel, Home Depot, and 3M. So U.S. Steel has my complete attention, along with Devon. Looking at the sniper targets now. KMX. Wow, a 7 sigma move. I guess we got to go look and see what a 7 sigma move looks like, don't we? I think that's mandatory. So we're going to shift to the TC 2000 bundle, pull up the S&P 500, sort alphabetically, find our boy KMX. Off 24%. CarMax, the entire auto sales food chain is just getting slaughtered right now. So KMX, by the way, has a R10 of 50 cents. So here's how big that risk box is. That's $2 right there. That's $1. That's the size of his R10 risk box right there. So if you look at the OR3 and you end up having a risk box like this, in that first 30 minutes, you get 1, 2, 3, 4, 5, 6, 7 R, and your trailing stop gets you out. So it wasn't just CarMax today. It was Carvana as well. Everybody in the in that kind of nationwide retail used car space, the price of used cars have gone up like 50%, because nobody can afford the new cars. The new cars on average are going at 30 grand, and So there's been a premium on the used cars, and now those are all gone. Of course, it could be worse, saying prayers for folks that own Teslas in Florida right now. 2 million people without power. Go ahead, fire up that Tesla and get out of town now. I just, Diesel called and says, you miss me yet? So CarMax. Back to the Godzillas. You can be sure that CarMax and Carvana are in play again tomorrow. You don't have a 4 Sigma 5-day move and a 7 Sigma 1-day move and not still be in play. Look at the size of these. These are all better than 3 Sigma. So that whole stack right there is pretty amazing. And these are not far behind. Inside our tactical symbol set, Alcoa began to wake up, looking down. But you got market leaders like Microsoft, Nvidia, US Steel, Intel. Oof. Traders' delight right now. Behooves you to know how to trade. I was doing some math today. In our community of practice, we have over 300,000 man hours of folks sit on our advisory board. That's the core graybeards. So you got just one popcorn, a bunch of fence sitters. So Wynn is always interesting. That's the Wynn Casinos, the manic depressive, and then WRB is a fence sitter that's on the move, double green. I wouldn't even be paying much attention here. I'd be looking at all these dudes with these massive 1-day moves. Wow. DXC, the 6 Sigma move. Buyer's market, or a trader's market, I should say, because you may not be buying. You might even be shorting this thing. Sniper auto framer stats for those of you doing the mechanicals. The tactical symbol set. And again, I'm noticing those that are double green, like Apple, in play. Alcoa. So when it's very quiet on a 5-day, but the 1-day is in the green, that means it looks like very quiet 5-day, and then in this case, suddenly big down move. That's the beginning. That's day 1 of the big breakout. So you wouldn't be surprised to see it continue, or from a critical state rebound. So what you do is you find that closing price, you get your minimum manageable risk box bracketing it, and then you follow price in the direction it goes. Lather, rinse, and repeat. The NDX is telling the tale of the tape. All of this pain and suffering. Only a handful of things did well today. Energy, oil exploration, treasuries, oil and gold, so all the defensives and the commodities. Devon Energy, find the mover. ExxonMobil not far behind. So today it was energy or nothing. Even Chevron got into the act. All right, let's look at the traders today. All right, here's Nolan. All right, Nolan, I want you to post your written rules one of these days on these for uh, your your trading plan. I want to see a written plan. I'd like to see a written plan, exit strategy, and then for a daily after action review, I want you to think of plan, prepare, execute, and then assess. Those are our 4 phases. And then there's things that you want to sustain, and then there's things that you want to improve. And then there's going to be specific action steps that you want to commit to. And so I want you to think about that for each of those 4 phases. What part of your planning process was good and you want to sustain? Which part maybe needs improvement? And then what are 1 or 2 things that you might do as an action plan to fix that tomorrow? And how would we know, whoever your accountability partner might be? And then preparing your trades. Again, strengths, weaknesses. So a strength could be something you did that you want to keep doing, or it could be you refrained from doing something and you want to continue to refrain from doing that thing. So a sustain is not always an action. It was maybe withholding an action. And then on execution, you planned and prepared in a certain way, which includes rehearsal, and then when it came time to assess, did you do it the way you planned and prepared? Did you vary from it, and why? What are you going to do about it? And then assessment is take a look at the chart you post and take a look at the way you performed your daily assessment. Did you do that well? So you're actually assessing the assessment. So that's our standard daily after action review structure. You can find those forms in the chat room if you look for it, or contact Phil Wu. So let's take a look at what you got here. Here's that shelf, VWAP sloping down, PSAR sloping down. You begin here. There's a collapsing dragon. That's a pretty good entry. Standard risk. You get to no lose plus dinner for 2 right about here. Take the standard exit. That's how you do it. Now, you might have taken the immediate stop and reverse, but in a bear market, I'm not always so eager to do that, especially when the market's down and this thing's failing. Is that really the thing that I want to chase to the upside? I like this short. When you get this far in hand, maybe we can exit that here for a scratch rather than taking that bit of a loss. And then also, if you don't take that one long with the idea of getting to the VWAP, the fact that you got a COTA 2 here makes that interesting, and you wouldn't lose money on that trade. I like the short here, though, because everything got capped at the VWAP, and it could not get through the VWAP, so that means the downward move is believable, and that makes this the entry, and then you got that far. You wouldn't lose money on that trade. So this is a big improvement over yesterday. Stay focused. Add the elements of the plan as I described. Agnieszka. Let's see. So I'd like to see you getting short here after it breaks down. Still, that's not bad. Good exit. We'd like to see a re-entry here sooner. And then we should have been able to ride this one down to about here. Another way to look at that trade is to say, from here, once I get to no lose plus dinner for 2, like right about here, then maybe I can use the spine of the dragon or the skin of the dragon, and then I have just one trade from here all the way down to here, and that's about 2R. So just as an alternative. I like this. Caught at 2. You got paid. That's good. This looks like a short. What I'd like you to do is make that a red circle when you're going short. The initial entry was short, so make that a red so that we can see that we see the directionality. So like this was another short that scratched. And then I think you went short here. Took a fractional loss. I'd have been tempted by that as a caught at 2 right there, because it's breaking above the PSAR. It's above that dragon. You got some rising lows. I'd have been very tempted, and I hope that I could have scratched here and then pile on the short side, because again, it's rejecting the breakout. There's no breakout, so you could get short, I think, in here where the PSAR broke, and then you would get paid on this one to about here, edge of the dragon, and then when this rolls over again, you could be short here or there. Either one of those is fine. So fractional gain today, it might have been maybe 1 R left on the table, 1.5 R. Still pretty good work. Here's less. And we got the Kiwi dollar on the 3s. There's the PSAR flip. He's long, he gets paid. PSAR flip, he waits for it to break through the bottom of the dragon, gets short. Oh, where were we? We did finally get back after this little shelf. Covered. Yeah, but even if you get out there, you got to be getting in again. That's another 2R. Great PSAR flip. Good cash, good reentry, scratch, and a micro gain. 3.6R, nothing to sneeze at. That's really good work. And room for some improvements there too. Here's Woj on XRP US dollar pair. Quick loss, quick scratch. This was slow on the rebound. That should be entering here. And then that pays you instead of a scratch. And then this could have entered maybe a few pennies earlier. When you're that far in hand, take it at the edge of the dragon so you get paid. We missed the PSAR flip, and now we gave it 1, 2, 3R in hand. If you're using that, a 3 risk box move. And then we get in, and then and then you allow it to give you a full 1R loss. So don't do that. When this thing doesn't work, here's your 1, 2, 3 exit instead of this, and then that actually becomes a long position, which you probably would have lost a little money on. Nevertheless, that's a potential short, as you noticed, getting to here. Okay, so took a break inside here. Missed the mark. You don't want to chase. You chased here. Oh, man. So if we don't get that one, where it rejects the VWAP, Santa Maria, we want to be short here on the collapsing dragon, or here on the collapsing RL10 dragon, or here on the collapsing RL10 dragon, or here on the collapsing RL10. Those are all possible second and third entries instead of this one. And then here's your PSAR flip. Oof. Even so, he's 5R. He's 5.5R for the day on this one, but watched 25R sneak away. Where do I mean? Where's the 5R? Oh, on the continuation. Z3 pinch, gets the breakout, cashes, re-entry, cashes. That's better, re-entry, cashes. But there's another plus 25R on the table. You're supposed to tell us when those meetings are happening so that we can sharpen our knives. We're starting to get upset about that. Kidding, of course. Just think about that one. How'd you like to have a 6-hour day and be that upset? Well, you can't get them all. That's going to happen. But you got 6. We'll take 6. If you don't want 6, we'll take it. We'll take that off your hands. Now, shifts over to Devon Energy, and he smashed that one out of the park as well. Tried the short, didn't work. Stop and reverse, crushed it. There's your second entry on the COTA 2. There's the third entry. That's a good exit for 4.7. Here's another one in the usual way. And there's another 1.5 for 6.6. And Tesla, I mean, why not? For another 3. So that's 9. That's about a 15-hour day, if my math is correct. Yeah. Monkeyed around a little bit in the Aussie dollar on the 5s. A couple winners, 3 winners, a nice big winner. Another 4 in the Aussie total. From the other symbols, 15. So a 19-hour day. And that's with 23 that he didn't get. So let's try and tighten that up. I know you want 19, and you're happy about 19. Let's get 40 next time. That's everything we got for the day, fellas. That's what happens in bear markets. You get some chances. Take good care, and we shall see you soon.